Hi there, welcome to video number 18 of module 2. This is going to be video number 2 of module 2. Alright, let's go back to our navigator area, and while I open the indicators list, navigate to the Accelerator Oscillator. Make sure that the thickness on the right hand side is select to the second one if you haven't done that already, and just leave the colors as they are and click on OK. Alright, what we see here is the accelerator oscillator now being applied to the bottom part of the window. Okay, and you will see some figures at the top, one at the bottom here, and then one in the middle, 0.00. Now as I'm scrolling over it, it's bringing up a caption that's saying vertical scale, alright, or the 00 line as it's sometimes known as. Okay, so the rule of thumb is the basic signals for a buy signal is when you see it go from green, where I've got my cursor over, when it goes from green and then then it goes above the 00 line and it goes green again, on the finish of this bar you will go long, and on the end of this bar, when it starts to go red, you close it. Alright, now long means if you think that the currency prices is going to increase. Essentially what you're doing is that you'll be buying this particular currency pair, which is the euro versus the USD, and we're on the 30-minute time frame. Alright, so let's move on and find another buy signal. This is based on what the public say. When you see that when the green goes from green to here and then it starts to create a bar above the 00 line, above the vertical scale, it's a buy trade. And when the green bar turns red for the first time, then you need to close that trade. Alright, now short trade is basically the opposite. When you see the red one here, what you're looking for is for the next red bar to be under the 00 line, and then you go short. And then as the red bar starts to turn green, you close that short trade. Alright, now this is okay to a degree, but you really need to filter these strategies to the point where you can take out any possible losses. And let's give you an example. Okay, I've just got my crosshair tool out and I'm going to line up where the green bar is, and this is where it's essentially going to say that you're going to have to get in around about here. So as soon as it goes green and this bar is green, you want to go basically long around about there. Now you're going to have to take some of these strategies with a little bit of pinch of salt, because not all strategies are 100% perfect, but when you use proper money management and risk management, you should be okay. Alright, so when the way that you should really be doing it is based on the way the public say. Here is the green bar, and if you take a look at the green bar here, this is probably where you would get in, right at the top. Okay, but unfortunately this doesn't have much volume in the trade, and eventually as soon as you go long, it starts to come back down again, and this here will be your warning to get out. So you probably would have lost about 20 pips on that trade. Okay, now if we take a look at another one, if we get in on this red bar here based on what the public say, which will be down here towards the end of the candle, we'll get in on this bar and we'll get out on this green bar, which will be here, and it'll be around about there. So that's like 6 pips. Alright, and that's not really good. Alright, so how do we really get money out of this? Well, there are two ways. First is to find where these possible entries come in that don't really produce many pips and find a way to actually maximize it. And the second way is to change different time frames. Alright, now I'm going to show you my way of doing it. Okay, and this is how I filter out the possible losses that can occur. Now what you need to be looking out for is this green bar needs to be above the 0, 0 line, but on the same token, the bar that you're actually hovering over, this candle here is red. Alright, you can just see it where my cursor here is. If I move my cursor out of the way, you'll see a red candle. Alright, you now can see that red candle right there. So that is not a buy trade. Alright, what we're looking for, we're looking to have green bars, okay, and then having a green candle as well in the same line. Alright, now that is one way that you can go ahead and start performing the trades my way, but you will also notice that in this particular instance here, it was the same as the way that the public would do it as well. When you get into here, it would only go up so many pips and it starts to come back down again when this starts to change color. So the only other way to get around this is because you're going to have possibly more losses than gains with this particular time frame. So what we would need to do is go up to a higher time frame. Okay, and then we'll start analyzing the market again and take a look and see basically where we can work out where we can go in and get some money out of this particular trade on a higher time frame chart. Alright, so here is a green one right there, and if we got in there and got out there, that would turn out to be a loss as well. Alright, so let's have a look at some others. Alright, what I tend to look for, the best way is that the first green color should really match up the same with the candle as well. So here is a red one here, and we need to see a red one there. So that's true. So we go short on the next candle, and we come out on this green candle right here, which will be around about there for 59 pips. Alright, let's take a look at this green bar, and this green bar actually hovers over a red candle, so that wouldn't be a trade. Let's take a look at this green bar. This green bar sits on a red bar, on a red candle, so that's going to be no good. So take a look at this next red bar under the 0, 0 line, and it does sit on a red candle, so that will be good to go short on. Alright, and then we can get out on this green bar right here, which will be around about there. So we would have only made about 17 pips. It's not a lot, but some strategies, some indicators give you more pip gains than others. Alright, but if we switch to the 4-hour time frame, we should be able to gain a little bit more out of this trade, out of this particular currency, out of this currency pair. Alright, so we're looking for the same rule again. Now, sometimes you have to modify your strategy when you go up to a higher time frame. Like for instance, our rule on the 1 hour time frame was to make sure that the green bar, the first green bar above the vertical scale, matches the candle right above it. Alright, if it's the same color, then great. If it's not, then move away. Alright, and also it should be the first green candle. Let's take you back to the 1 hour time frame to give you another example. Like it needs to be the first green red candle. So here for the short trade, here is your red bar, and the first candle above it is a red one. The one before it was a green. Alright, now if this one was a red, then this one would not be a viable trade. It needs to be bang on perfect. So like this one's a green and this one's a red, so that's no good. Let's take a look at this one. This one's green for a buy trade. Alright, but this one's red. Alright, so that's no good. Okay, this one's green and this one's green, so that's good. The one before it is red, so that's okay. But if the one before it was green, then I would not choose this trade. Alright, so basically when you get into a higher time frame chart for the 4 hour, we can modify our strategy a little bit, because essentially what we're looking for in the 1 hour time frame, we want to see the previous candle be red, and we want to see the current candle that we're hovering over to be the same color as the bar that's above the 0, 0 line on the vertical scale for a buy trade. Alright, but with the 4 hour time frames, you can be a little bit more lenient, and you don't necessarily have to wait, or don't have to wait for the pre-requirement of the previous candle to be the opposite color. It can be the same color, because with the 4-hour time frame, it's going to move a lot slower, but it's going to move in a greater moves of, like, 50, 60, 100, 200 pips. All right, so let's give you examples from left to right. Okay, so here is a red bar, and when we hover over that red oscillator bar, it actually gives us a green candle. So that's no good. We don't need that. All right. Now again, we look at this one here. Now this could actually possibly turn into a loss. Now, with that being said, when you start coming out with your strategies and you say, okay, well, here's a buy trade based on what Loz says, and then go long, but then the next bar has come out to be a red one. So how do we minimize the particular kind of losses that can occur? Well, the best way is to use support and resistance levels. Alright, I've just got my horizontal line tool out from the top here, and I've put in my horizontal levels for my resistance, and I can put some in for my support. Alright, now if you don't see any signals, if you do see any buy signals, but the buy signal happens right at the top of a resistance, which is right here, and basically a resistance is an area where the majority of the traders out there prefer that the price do not go up any higher. Okay, and a support is basically where they're happy for a level to come down to, but they don't want it to come down any lower, so therefore this comes as a is referred to as a support. Alright, so this is another thing that you need to pay attention to. I'm actually throwing this all around a little bit, but as we move into the other indicators, I will start doing things like the way I'm showing you right now, which is really the first step that you should be doing after you apply your indicator, is to apply support and resistance levels. Okay, and we'll go through those in this module too, and then hopefully by a few videos or so, it will become a little bit more easier and apparent of what it is that I'm doing without really explaining it in great detail. Alright, so here we are with our setup now. So we've just looked at it. Now we're on the 4-hour time frame. Now I honestly believe that the 4-hour time frame will be your best bet to learn and study from. The lowest time frame I would suggest would probably be the 1-hour time frame. But if you just want to get in and do some trades and you're not really bothered whether you make a loss or whether you make a gain, which is still okay, go ahead and use the 15-minute and the 30-minute time frame just to get used to opening the trade, alright, and seeing what happens, okay, and if it gets into profit, close it if you want, and just keep doing that for a little while, or you can set take profits on it, and we'll show you that in a little bit.